Jonathan, start with you. I mean, again, a big sell-off after a terrible week last week. Does it surprise you when we continue to see these huge moves to the downside?
Look, I think we're watching every headline and every tweet that comes out of Washington, and having a short trading session today with little participation and low volume, the headlines that we got this weekend really were going to have a huge impact on our market coming in today. I think people were foolish thinking that it was going to be a quiet weekend and the news cycle was going to be quiet heading into the holiday. But the headlines that we got out of Washington has put significant amount of pressure on our markets, and it doesn't seem like there's an end in sight anytime soon.
I think the fundamental question, Scott, I mean, no matter what the headlines are, is there a disconnect between the U.S. economy and the markets?
Well, we think there is, Sarah. I mean, this is pretty much a shoot first and ask questions kind of, ask questions later kind of market. And for us, as we look ahead, we think we'll have decent GDP growth here and really abroad, and really only modest inflation. So I think, I thought you guys did a good job talking about what in our opinion was kind of a PR blunder. Certainly, as you pointed out, the Treasury Secretary probably has frequent conversations, or you would hope so, with all of these major financial institutions. And just the headline, as Steve Leisman pointed out, rather than the strong economy at the top, it was kind of the negative at the top, or what the market interpreted as negative. So, we're pretty panicky here right now, and it's going to be like this for a little while.
So did that clarify things? I mean, I told you that they said that the Treasury said that it should have been about the economy, because that's what they were talking about with the CEOs.
Well, Sarah, you could see, when John Williams went out and talked to Steve last week, he said the right things, but obviously, I mean, that worked for 20 minutes. Now you have the Treasury people talking to you and clarifying, but it doesn't really help. So, I mean, there's been a couple of PR blunders here. The market is very sensitive to Fed mistakes, slowing global growth, those types of things. And, really, when I look back, after the Economic Club of New York speech, I mean, the Fed chair had the market in their hands. We had positives from Xi and Trump at the G20. The administration had the market in their hands, and then we've had these PR blunders after that. And clearly, since December the 3rd, the market just fell off a cliff.
We just hit session lows as well on the Dow. We're down 526 points as we speak. Rick, if I come to you, clearly there is some disconnect between the fundamental GDP for this quarter, last quarter, and where the market is in its head. What about forecasts for next year's GDP in total? Has that come down along with the market in the last couple of months, or has that sort of been where it's been for most of 2018?
Like all analysts, whether on Wall Street or dissecting a stock, a company, or the economy, they definitely get affected by what's going on around them. So I think that this trend is, of course, going to lower everybody's expectations for GDP. The issue is that the Fed really doesn't have to make any decision for darn close to 3 months, March meeting, as to what they'll do next. And everything that's going on, I understand all the nuance of interpretation. But let's be clear here. Paulson is the Treasury Secretary during the crisis. At first they were going to borrow $750 billion to buy toxic assets. That never materialized. It morphed on the fly. Things could get messy. I can't believe some of the nuances, though. Really, they can't understand that anybody would be worried about liquidity. I'll tell you what. Go visit any major FCM in this business and ask them how many hours a day they're putting in when markets are moving like this. Or talk about margin and leverage, or how many times Treasury Secretary Mnuchin was concerned about market structure. All the articles beginning in December. Listen, I understand every nuance is the wrong nuance, because the message isn't really any of these individual thoughts or what the Treasury Secretary is saying. The issue is quite simple. The central banks of the world propped up the stock market to a point where it can't sustain itself during normalization. And normalization of only a few of the participants in the grand liquefied scheme of things. That is the main issue the markets have to contend with, and they can point blame at whatever they want. There's a whole industry that does that, and this president certainly doesn't get the benefits of much of that.
Very quickly, Jonathan, Corpina, 2366 on the SPX at the moment. Next key level to be watching?
I mean, we just broke below 22,000 again.
Yep, we're going to stay there. And we're going to 2350 is the next level that we're looking at. But when you have the moves that we've seen over the last 3 weeks, all those levels kind of go out the window.
Particularly, as you said, low volatility, shorter session today as well. We'll keep an eye on that.